So welcome back to the channel. For this CPI day, we're going to cover the CPI data, the recalculation method, plus we're also looking at decentralized stablecoins. Is yet another narrative just born?
You're joking. Not another one?
These narratives pop up very quick here in the crypto space. You've got to be on the ball with this. We'll cover that in more detail in just a moment. But if you enjoyed the video today, make sure you subscribe to the channel. So starting off here, it is of course CPI day in the US. So these are the facts and figures, 8:30 a.m. New York time, the figures will be released. The forecast month over month is actually a 0.5% increase. Previously it was down 0.1%, but there has been a revision of the previous month's figures. CPI year over year is forecast to come in at 6.2%. So this is the real magic number, I believe. Previously it was at 6.5. If we can bring it down to 6.2 or maybe 6% or even lower, the markets are very likely to rally. And the reason I do believe we'll come in maybe lower than this is due to the recalculation method, plus the fact you had Jerome Powell speaking last week, and he seemed very, very relaxed, talked about the deflationary cycle is now underway. And I think they're spinning out the narrative that they have inflation under control. Even if that is not the case, they're massaging the figures, I believe, in order to make that a fact. So here is the weighting change. We've covered this a few times on the channel here. It is being picked up quite widely at this point now. So essentially the BLS, which is the Bureau for Labor Statistics over in the US, they're the ones who actually calculate the CPI on this monthly basis here. And what they're doing is changing some of the spending weights. So this is due to a calculation where they previously take back 2 years worth of data and they calculate the spending weights based on that. But now with this update here, the BLS plans to update the spending weights in the calculation of the CPI every year instead of every 2 years. Why is this significant? Well, if you think back 2 years ago, if you include that data, you would have that kind of just around the pandemic time. Inflation hadn't really peaked out. This is when the money printing really started to ramp up, but inflation lagged after that fact. So if you went back 2 years and took an average price, you're likely to get a lower average price as inflation has peaked over primarily the last year or so. So by doing this on a 1 year count back, they therefore are counting against the highest inflation that we've seen, which would have occurred within the last 12 months. So this is the first month of this new calculation. So I do expect it will come in a bit softer. And this would really make a lot of sense with Jerome Powell's kind of soft tones and the kind of victory lap he was doing, suggesting they had inflation under wraps at this point. So we'll see how these figures come out. They could surprise either way, to be honest with you, but I do think it will be to the downside. And a lot of smart people online suggesting so. Then previously we've also got this factor. There was a revision in the previous month's figures as well. So the data from December published in January was revised upwards. So what do you know? You published the original figures. They seem pretty damn good, but then you revise them up afterwards. The market primarily cares about the initial release of the figures, and the market's actually rallied on that data. But if it was released as the correct numbers, i.e. these revised numbers, I don't think we would have rallied so hard. So it's pretty weird to see that they are just massaging figures left, right, and center. It states here the consumer price index in December was up 0.1% rather than dipping 0.1% as reported, and data for November was also revised higher to show the CPI increased 0.2% instead of 0.1%. So if you can see this chart on screen here, you can see that from the peak, which was June of 22, 9.1%, 8.5, 8.3, 8.2, 7.7, 7.1, and then 6.5%. The chart is definitely coming down here. So pretty much if it can just maintain the momentum of that coming down, maybe we get the forecast 6.2% or even less. They will continue to be doing their victory lap and claiming that inflation is under wraps. Now on to Mr. Gary Gensler, the SEC, and the stablecoin narrative that is unfolding in front of our very eyes right now. This is a pretty good meme, showing you that as investors and crypto companies burn under the forces of fraud and a load of other shenanigans in the market, Mr. Gensler runs in and saves SBF there. So this could potentially be of interest here that the fact came out late last night that Circle actually warned the New York watchdog about the Binance BUSD token in 2022. So maybe they've kind of snitched here on Binance, and this is the reason for the crackdown yesterday. So DB tweeted out, Circle alerted the watchdog last autumn to issues its team had surfaced in blockchain data that showed Binance did not store enough crypto in reserve to support tokens it had issued. around the time when Binance stopped support for USDC and started auto-converting into BUSD. So the competitor here with USDC that was removed from Binance Exchange, that would have had obviously an impact on their business model and usage of USDC, Binance being the biggest exchange. Well, rather conveniently, when this happens, they have their eye blackened while they go ahead and start snitching on BUSD here. So this could well just be massive whale games on a large scale. Remember, Circle are heavily invested in by BlackRock. So I would believe that USDC out of all this should be the safest asset when you have the biggest of asset managers in the world. Backing up this particular stablecoin, things shouldn't really go too far array in the short term. A KYC implementation down the line is certainly something I would be wary of, however. So this really does bring up that narrative of decentralized stablecoins. Quick segue, Visa partnered with WireX to issue crypto debit cards to users in over 40 countries. So when you have the likes of PayPal on the one news headline not pursuing their stablecoin as yet, you can see Visa are still providing payments rails for crypto. So an absolutely huge company there still backing crypto. So it's not all doom and gloom. Now, in terms of the lists that have been flying around here, this is a pretty good one. So this shows you some of the stablecoin issuers and their kind of governance tokens or value capture tokens behind them. With BUSD, that's going to be drawn down over time here. People are going to have to move to other stablecoins. And I think primarily they're not going to be wanting to opt into highly centralized ones, as what we're seeing is a form of censorship and a lack of, ability to do what you want. So you want kind of censorship resistant, decentralized stables. Some of these are algorithmic. So just going through some of the big boys here and some of the big names. Frax with FXS pegged to $1, Aves Go, a new release. Curve USD is coming out very soon. DAI, which has quite a lot of USDC backing it from Maker. They're trying to actually implement some plans to move away from USDC. This could be interesting. Tron's USDD is one that is overlooked, but I did a bit of research yesterday. Huge amounts of TVL on Tron, but primarily not used in the West, so kind of outside of our view. But in Asian regions, they do use Tron network quite heavily. And then Liquidity's LUSD is a stablecoin backed up by ETH. So this is quite interesting to see that we've started to see a movement in the stablecoin flows here. One thing to note here, and showing the PvP nature of this market right now, if you go to the 2023 data on stablecoins, this is the overall stablecoin market cap, $136.87 billion. So this is essentially how much liquidity is in this system. When this is ramping up, it's no longer a zero-sum game. There's new entrants coming in, bringing money to the market. Everyone makes gains. But as you can see from 2023, it's gone from 137 bill to 136 to 137, and we're still at the top end of 136.87 billion here. So it is a player versus player market, and you can see that by these narrative rotations, money is going from one area, LSDs. It went to the ZK narrative. It's now seemingly going to the stablecoin narrative. And so if you're not very much on your toes here, you can be left behind holding bags. So it is, I would suggest, a trader's market at this point. Now here we have a list of the various stablecoins in existence, and there will be some big winners within these categories, and so I have started to position in a few. The ones I've chosen are Liquidity's LUSD, as it is on so many chains, and this data is a bit annoying as I can't really scroll across here, but it is up in terms of its total market cap. Over the last 7 days, just off screen from your vision, 23% increase in the number of stablecoins of LUSD. So a lot of them being minted here. And I think this would be primarily the kind of DeFi degens or DeFi OGs that will be flooding into this stable. And another one as well I got into is Inverse Finance's dollar. This one is up 77% just off screen here over the last 7 days. So a lot of that has been minted as well. Notable mentions in here are the Tron-based ones, USDJ and also USDD. Huge TVL, which I can show you on here. If you go to Tron on the stablecoins, you can see a variety of things. USDT dominance, 95%. So mainly on that chain, it's USDT. Now this one has escaped the law enforcement of the US here. So USDT could be an overall winner. And as you can see, there's a huge amount of liquidity on the Tron network, over $37 billion out of 137 bill. So even though we don't hear about this too much, it clearly makes up a massive proportion of the crypto ecosystem. Then I was flicking through these and you can see obviously there's a huge reliance on BUSD in the Binance ecosystem, 53% dominance. This is a little bit concerning concerning for me and I would suggest provide some risk factors for BSC altcoins at this point in time. You can see some of the interesting flows here. 12% up in terms of stablecoins in Arbitrum. Arbitrum coins have been popping off. Liquidity is cycling through there. I do feel like this might be a little bit toppy at this stage with some huge numbers being printed. You can see down optimism 4.7%. Phantom is around equal, so there could be some inflows, maybe a rotation from the likes of Arbitrum here if it does start to top out a little bit into some of these other ecosystems. You can make some plays around that. Solana's around flat, and Ethereum here finally down 1.61%. So this shows you some of the liquidity moving from ETH into Arbitrum L2. So I picked 2 coins out to invest in with this new narrative underway. The first was Inverses Finance INV. I chose this one because it was low cap and the stablecoin issuance has gone up a lot in the last week, up 77%, which is obviously a bullish thing. And due to the fact in the previous narrative I've been playing, like the LSDs, like the ZKs, I hadn't really picked out a very low cap one. And what I've noticed is the very low cap ones do pump a lot. So I thought I would add one to the portfolio here. That is INV, Inverse Finance. And then the second one here is Liquidity. This one is very volatile in the price point due to a lack of liquidity overall, I would suggest, and people moving in and out of this one. But it is definitely trending up here. Bit of a parabolic movement yesterday and a little bit of a retrace here, but I think it will hold this kind of level. And what I like about this one is the fact that this is kind of the DeFi users' stable of choice. It has been backed previously by Tetranode and people like Corpy, who are big in the DeFi sector, tweeting things like this. What if the SEC orders Liquidity Protocol to stop issuing LUSD? Well, it can't because the protocol is immutable. Nobody can do that. I think getting some cheap LUSD may be a good move here, especially if USDC FUD is next in line. So the stablecoin market really is the lifeblood of cryptocurrency here. And if we do have a movement away from centralized versions to decentralized ones en masse, there will be extreme winners in this sector. And also, if you couple in the fact, say USDC does get flooded to death here by the SEC over the coming week, I think this will be bad for the crypto markets overall in terms of they would start to go down. However, you could still get outliers with some of these tokens going up as they would benefit out of this scenario overall. So in a way, it's a little bit of a hedge. But that is all for today's video. Let's hope CPI comes in a little bit softer here and they have done their massaging of the figures necessary to pump our bags. I'll see you in the next one. Peace.